Now, I bet some new or experienced investors typed into Google best ETFs to invest in, and most likely they saw both VOO and SCHD come in as the top results. Now, both of these ETFs have performed very well in the past, and they most likely will perform very well in the future and give super high returns and results to investors. However, they both have very different goals for investors and should be noted. Most likely VOO or SCHD will be the largest portion or the largest allocation in anyone's portfolio of at least $100,000 before compound interest comes into play and you'll retire a multi-millionaire. Let's see which one of these ETFs is the best if I had $100,000 to invest in right now in 2023 and beyond. So VOO tracks the S&P 500, which tracks 500 of the largest companies in the United States by market cap. Now, SHD holds a little over 100 stocks at any given time that pays a large and focused dividend to investors. Now, while SHD pays a huge dividend for passive income to investors to maybe pay some expenses or maybe even live off of these dividends in retirement, VOO doesn't really pay as high of a dividend compared to SCHD. SCHD's dividend yield for the past trailing 12 months is around 3.53%, which is over double VOO's dividend yield of 1.52%. So if we invested $100,000 inside of SCHD, we would earn $3,530 a year in annual dividend income versus VOO, we would earn $1,520 a year in annual dividend income. So overall, with dividends, SCHD takes the win in my book. Now, dividends are just one part of the equation as we have to take into account for the total return of an ETF. Now, VOO beats SCHD in my opinion for total returns. Now, in the past year to date, VOO is up 18.69%, while SHD is down 0.48%. In the past year though, VOO is up 10.95% and SHD is given 2.54% total returns. In the past 3 years though, SHD is up 45.41%, which is outperforming VOO of 40.67% returns. In the past 5 years, VOO is up again 69.20%, while SHD is up a little over 64%. And in the past 10 years, VOO is up over 218% and SHD is up 194%. Now both these ETFs are very similar in returns, but I'm going to give VOO the win on this one as it's able to give over 10% annually, which is super hard to beat. Now, contributing to the great performance of both these ETFs are both its holdings and sectors. Now, VOO is very much a growth ETF in my opinion, and is more focused on its highest allocation to technology, which is a growth sector. Now, SCHD on the other hand is more of a value-oriented ETF with a focus on dividends, and its highest sector is going to be in industrials, which is more defensive in my opinion. So SCHD is overall going to be less volatile than something like the S&P 500 or VOO, which is very much a growth-oriented ETF. And even if we look at the top 10 holdings of both VOO and SCHD, we can see VOO is very much concentrated in more tech and growth-oriented funds like Apple, Microsoft, and Nvidia, Amazon, Google, Tesla, you name it. And SHD definitely has more of a defensive play, Cisco, Home Depot, AbbVie, Chevron, Merck, Verizon, Coca-Cola. Very much these dividend stocks are going to be very sticky, and over time they're going to be growing up on their dividends and even their share price, as dividend stocks are going to be cash cows and cash growing machines, and even growth funds are going to be growing in their share price more than their dividends, which is why both ETFs have very good returns. Now, the expense ratios are pretty similar in my opinion. However, VOO takes the win in expense ratio as SHD has nearly double the fees over VOO of 0.06% expense ratio versus VOO's 0.03% expense ratio, which is 50% less than SCHD. And for every $10,000 you invest in the funds, you'll be paying out $6 annually to SHD and $3 annually to VOO. Now, if we invested $100,000 inside of SCHD and VOO separately over the past 10 years from 2013 to 2003, we would have over $363,000 with SCHD and the king of VOO of $386,000 from a $100,000 investment. Now, our compounded annual growth rate would have been 12.86% with SHD and over 13.5% with VOO. Now, our standard deviation is going to be a little bit higher with VOO of 14.58% and lower with SHD of 14.16%. So VOO is going to be a little bit more volatile than SHD, And the best year, SCHD actually outperformed VOO with over 32.89% returns, and VOO had a 32.39% return. In the worst year, SCHD outperformed VOO, as dividend stocks are going to be a little bit less volatile and they're going to fall down less in bear markets compared to VOO, which had the growth stocks inside of it, of over negative 5% returns, and VOO had a terrible year of 18% negative returns. With all that said, the S&P 500 or VOO has been around for decades. It's been able to weather many recessions and economic crises in the economy and in the country and even the world. It's one of the best ETFs to compound your money of over 10% on any given year, and it's going to be an amazing ETF for the long term. Whether the market's going to be down, you can always dollar cost average and count on the S&P 500 going back to all-time highs if you believe in the American stock market. And even if you don't get that super high dividend yield of SCHD of 3.5%, you still get a super healthy and stable dividend of 1.5% in any given year to provide investors with passive income and even growth in their capital appreciation. SCHD has its perks as well of having a super high dividend of over 3.5%. It's going to be less volatile than something like VOO, which is more of a growth play, and SCHD is definitely a value play. So in bear markets, when stocks are going to be falling, SCHD is going to be falling less, and you can even count on a super high dividend. So just because the markets are going to be down, you're still going to be making super good money in dividends from SCHD while you wait for the markets to rise and recover to all-time highs. And SCHD is able to take advantage of a dividend snowball, where if you continually invest in your dividend portfolio or dividend ETF like SCHD, over time you'll see higher dividend payments year over year and quarter after quarter, and those dividends will compound, and over time you can even live off those dividends and keep your capital appreciation growing. So over time your capital appreciation will rocket and your dividends will be enough to cover your expenses and even live comfortably in retirement. So if I had $100,000 today to invest in either SCHD or VOO, I choose both. The reason being that both of these ETFs are going to be amazing for the long term. They're both going to make you a multi-millionaire if you just dollar cost average into out of these ETFs, hold and wait for the long term, and over time your money will grow and compound and you'll be a multi-millionaire. Trust me, you won't regret it. If you're more of a growth investor, I'd say choose VOO and other comparables like VTI, because you're going to be getting a super high growth and capital appreciation and even healthy dividend yields. Now, if you want to sacrifice maybe a little bit less growth for more dividends and dividend payers, less volatility, and overall peace of mind for growing dividends and capital appreciation, I'd say choose SCHD, as you can't go wrong with either of these funds. And other comparables to SCHD is going to be something like DGRO in my opinion. Now that about wraps it up for this video. Hopefully you guys enjoyed it. If you guys did enjoy it, please give it a like because this cute puppy did, and comment down below if you are a VOO or an SCHD investor. If you have only VOO, only SCHD, or even both in a growth ETF form, comment down below which ETFs you are investing in. Hopefully you guys have a great rest of your day. I love you guys so much. Take it easy and have a good one. Peace.